Hello and welcome to the 24th lecture of the course Forex in 3 steps. In the previous lecture we've talked about support and resistance and how being able to identify support and resistance areas is important, and we also mentioned that you need to be aware of how price reacts in those high probability areas where price can reverse, and there is no better way to judge a reaction other than reading price movement through candlestick patterns. And this is our topic for today's lecture. So again, Japanese candlesticks, they have been used for centuries and are considered one of the oldest methods for analyzing price movement. Candlesticks can form patterns such as the engulfing candle and the hammer candle, which provide important signals about market direction and potential reversals. We have looked in previous lectures what a candlestick means and what it's trying to explain, and there are certain patterns that you can just memorize and be aware of, and these patterns can explain to you whether a reversal from here is possible or not. So price action, what is price action? Price action is the analysis of price movement on the chart without using any indicators to understand market behavior and make trading decisions. So there are three very famous single candle types. First of all is the hammer. Why is it called the hammer? Because it looks like a hammer. The hammer has a long wick and its body is usually very, it looks like a cube or a square, and it's usually on the top end of the wick. And it looks like a hammer, as you can see here. What does this hammer candle indicate? It indicates very strong bullish and buying momentum. And why is that? Because if you remember what we said about the candlesticks, it means that the lowest price in this specific period of time was here, right? And the open price was here and the close price was here. So it means that the price opened here and it dropped all the way to a specific support zone, for example, and then it went back up all of this again and closed here. And that means that when you see this, it means that price has hit a very strong support zone, and that is why it reacts like this. So when you see this, this is a good confirmation that a support zone or a buy zone you're looking at is good and may reverse price in reality. The opposite of the hammer is the reverse hammer, which is also very similar, but it's reversed, and it's an indication for bearish and seller momentum, not bullish and buying momentum. So this also means that price has likely hit a resistance area and is rejecting from it. And same goes here. The highest price reached in this candle is here, and then even though it opened here, so price opened here in this time frame, and then it went up all the way here, and then it closed back all the way here. So that means that price has hit something and is rejecting very hard. And even though the lowest price reach was here, it closed here, but that doesn't really matter as long as the wick is not seen, or even if it's a very short like this compared to the other wick, it's okay. It's a good sign to sell. And the third type of single candlestick you need to know is, we call it a doji candle. Why is it like that? Because it is an indication of neutral momentum. So it means that there are not enough buyers or sellers to push price in a certain way. It is known for its uncertain momentum. So if price hits a support or resistance area you're looking at and you see this type of candle, usually you should wait for the candle after it until you see one of the more strong candles like a hammer or a reverse hammer candle. The doji's characteristics are very neutral. You have a wick to the upside and a wick to the downside, and usually the open and close price are very close, and that is why it looks like a T. There are also candlestick patterns that are formed by several candles, not just one candle. So here we talked about the single candles. Here there are a combination of candles that give you information and show you a pattern that talks to you. The first candlestick pattern we have here is called the bullish reversal pattern. And this basically means that price is going down. As you can see, it came here into, for example, a support area, and after the bearish candle or the red candle, it is followed by a doji candle, which shows that there is uncertainty. But after the doji candle, we see a reversal candle. That means that price is reversing. This is a very famous pattern. It is a 3 candle pattern, and as you can see, we have the opposite here as well, bearish reversal. And a bearish reversal is the same thing, but the opposite. You have a bullish candle, and then it is followed by a doji candle into a resistance zone, and then after the doji candle we have a bearish momentum candle, which is usually big, and sometimes it is even bigger than the opposite green candle. We also have bearish momentum and bullish momentum candles and patterns, which means that when you see a candlestick that is, for example, here in this case green, and then it is followed by an engulfing candle. What does engulfing candle mean? It means that the candle followed by it is way bigger and it closes below it all. So as you can see, this body closed here, it closed here, and it really shifted momentum and it really engulfed the previous candle. And that is something that also means that there is bearish momentum and there may be a reversal happening. And same goes for a bullish momentum pattern. We have here a small bearish candle, a red candle, and then it is followed by an engulfing candle, which usually means that a reversal is likely to happen. There are also candlestick patterns in trends that you need to be very aware of as well, because not all candle patterns mean that there is a reversal coming. Some candle patterns indicate that a continuation of the current trend will continue. And here we have something called the 3 candle pattern. The 3 candle pattern consists of 3 same colored candles, either bullish or bearish, and they are all need to be considered big candles, big engulfing candles like we talked about. And when you see this pattern, it means that the continuation of the trend is very likely, and that means that buyers, in this case buyers, are very in control of the market. And same here, if you see a pattern that consists of 3 or more candles, bearish candles, and they are all large candles, that means that there is very little buying momentum and the sellers are very in control. And that is it for candlesticks. See you in the next lecture.